The euro fell today due to Greek Prime Minister Antonis Samaras' failure to complete an agreement from his coalition partners on €11.5 billion of spending cuts needed by lenders to his country. Today I'm joined by Lena Komaleva, Chief Economist and Director, G Economics. So what are your thoughts on today's meeting and how will it impact the markets?
Yes, well, there are two parts to this question, the euro's reaction and the event risk stemming from Greece. I'll start with the euro. As any euro watcher knows by now, the EU's management of this crisis has so far followed German Chancellor Merkel's formula. It's been more of a marathon than a sprint. The focus is on the sometimes divergent tactics of the individual EU players and their longer-term objectives than on the efficacy or the speed of the race. With this in mind, the euro's recent strong gains have been led by the sprinters in the market, if you like, following the ECB's announcement of its new OMT, Open Market Transactions Plan, last week. This marked a major turning point in the race, with the ECB's plans to support sovereigns with fresh liquidity, in effect making up for some lost time in political negotiations and individual Eurozone country reform efforts. But the question now is, would the ECB's sprint-like effect on the race to save the euro create a new momentum among the EU's lagging political pack, as markets hope? And with that in mind, the news that the Greek Prime Minister has failed to complete an agreement from his coalition partners on the spending cuts demanded by the Troika have injected fresh doubt in the market's mind today as to how far-reaching, really, the new momentum in the race to save the euro will be. I think on this point, the Greek negotiations failure, in my mind, highlight the twin political and default risks that continue to shadow the ECB's liquidity injection plans. This will continue to bear down on the euro, especially this side of the 130 barrier against the dollar, and I believe that an upgrade in this pair to the 130-135 range remains a long way off.
There has been some opposition from Dutch Prime Minister along with some politicians in Finland in terms of loosening Greece's austerity measures. Why is this, and do you think this will cause other Eurozone politicians to follow this path of opposition?
The key question here has been the point of loosening Greece's austerity measures as demanded by the Greek government. It is an unpopular measure for voters across the Eurozone, given that many realize that Greece is failing on its reforms credibility. And this voter backlash risks limiting the entire bloc's flexibility to address the crisis in Greece and indeed any democratic legitimacy of the Troika to approve fresh funds, as will likely be needed to extend to Greece later in the year. Yet on the other side of this argument, looking at the situation in Greece pragmatically, if one can afford to do that, the fact that the Troika keep flying back to Athens, even as successive Greek governments keep missing loan conditionality targets, and indeed two emergency elections in Greece this year have failed to produce a strong pro-reform effort. This means that there's a general will among the EU to manage Greece's default within the Eurozone, rather than risk a forced exit from the euro and an economic disaster.
There has been talk about a 6-day working week in Greece. Do you think this will actually happen, or what do you expect Greece to do over the next few months in order to regain financial stability?
Well, Greece needs a major productivity boost in order to limit the economic depression and indeed to restore some degree of solvency. But in the short term, a longer working week would and could help produce a stronger GDP calculation effect, as long as, of course, it is accepted by the trade unions rather than leading to more strikes. I think perhaps more important is the political rather than the economic impact of this proposal for a 6-day working week. And the reality is this: it is simply impossible for Greece to regain financial stability on its own without external official help. And so the government needs to do everything possible to assure the Troika that it is committed to reforms and the conditions of its existing loan arrangement in order to be able to continue to receive funds and indeed increase the amount allotted by the Troika in terms of lending capacity.
And finally, what other events should we be watching out for this week that may affect the performance of the euro?
Well, in my mind, the important point to watch is the German Constitutional Court's ruling on the proposed European Stability Mechanism, ESM, on Thursday. This is perhaps the most public legal hurdle to keeping the Eurozone together. It's been abundantly clear to all by now that for the euro to continue to function as a single currency rather than as an axis of division, if you like, within the Eurozone, it requires convertibility in euro assets and a functioning euro area-wide banking system. In this respect, the ESM, the European Stability Mechanism, while it's not a silver bullet solution to these challenges, it is, at the very least, a key political link for the Eurozone's political reunification and its struggle against the crisis. So the preliminary indicators on this particular event this week suggest that the court will approve the constitutionality of the ESM on Thursday. While this is great news, the question really is one of the conditions the court will declare admissible as a condition for its ruling with respect to the operation of the ESM, and whether these conditions for the operation of the ESM will in fact tie Chancellor Merkel's hands to the point that the ESM cannot become fully functional to use in the crisis. If the court's ruling on the conditions for the constitutionality of the ESM proves to be rather conservative, then it may in time undermine the legitimacy and the efficacy, if you like, of the ECB's, European Central Bank's parallel efforts in government bond purchases. And I think this will be the real test for the euro over the coming months. So perhaps in the short term, for the sprinters, for the short-term players in the market, this week's ruling by the German Constitutional Court could be a winning ticket to buy the euro. But for the rest of us, the marathon watchers of this crisis, it could well be a time to begin to take profit on what I call europhoria.
Thank you very much for sharing your views with us on the Greek economy. Tomorrow we'll be back to look at the Dutch elections. Goodbye.